Welcome
Okay.
back. We're here for the June 2024 HFRI Performance Snapshot. Hi, Ken. It's good to have you.
Thanks, Anika. Thanks for having me
So,
on.
how has June looked? Has it been an active month for alternative investments?
Yeah, it's been an exciting month. It's really, I think a lot of the excitement has been in the election and geopolitical risk category. In terms of hedge fund performance, we really saw a pretty flat month. The overall composite posted a narrow decline. A couple of strategies gained, a couple strategies declined. We'll talk through all of that, but I think what we really saw was managers positioning for the current environment, where there's a lot of elections going in a lot of different directions, and looking into the second half of the year, where people are continuing to see this. So you're really balancing macroeconomic interest rate and inflation risk with geopolitical, election, and military campaign risk. And there's a lot of uncertainty in that environment. So you've seen, as I said, a couple strategies gained, a couple strategies declined. Overall, the first half has been a good first half of the year. We're continuing to look forward into the second half.
Absolutely. Okay, so let's look at specifics. What was the top performing strategy for June of 2024?
Yeah, when we look at the leading areas of performance, we saw those were in the fixed income based relative value and equity hedge areas. You see here, they were both up. You can see the HFRI 400 was up about 0.5% and about 40 basis points by fixed income based relative value. You can also see event driven, just a narrow gain there, about 30 basis points. Those all below the performance of U.S. equities. You see here 1.125%, but leading the overall composite. You can see here the HFRI composite down 20 basis points. The 400 and the 500 in a pretty similar place, down about 0.33%. And the only really declining area for the month was macro, which, from our previous conversations, has been the leading area in the first 4 months before declining on the last two, as you've seen a lot of risks elevate in terms of energy markets and some of the trend following strategies that had exposure to those markets, as well as interest rate markets where there was decline. You can see here the HFRI down 1.2% for the month in June.
I see. And if we drill down, how are the sub strategies performing in June?
Yeah, here we see a little bit of a stronger standpoint here. We're obviously looking at the top performing strategies. You see the HFR 500 healthcare up 4.5% in the month of June. And that's really not that surprising, because with all of the volatility on both sides of the coin in the month of June, well, the one thing that was pretty steady were technology and healthcare equities. And so a 4.5% gain there. You see similarly nearly 4% for the HFRI 400 technology index. Quantitative directional has been a strong area. And it's interesting because in a lot of ways, those quantitative directional strategies are actually similar to the CTA strategies, which declined, but they are only focused on the equity hedge markets and only focused on the equity markets. So you see a gain of about 384 for quantitative directional in the month of June, which is actually leading. The quantitative directional is the leading area of performance in the first half of the year. So it wasn't just one or a couple of good months. It's been a good 6-month period for these strategies, which is really great. We talked about equity market neutral as well, and how that's really more of a low volatility strategy that really has been delivering strong performance in the first half of the year. It's very factor based and low net exposure, where there's a lot of mean reverting qualities. When volatility increases and things get messy, as they come back together, that's and revert to these historical norms, historical levels. That's when equity market neutral does well. And you can see 2.7% gain there in June. And then finally, the event-driven multi-strategy, again, kind of a roll-up of all of the different strategies: distressed, mergers, special situations, credit arbitrage activists, all of those kind of in one index, 1.75% there. And then all of those well ahead of the U.S. equities here. We see 1.8%.
Absolutely. So year to date, are we still ahead of U.S. equities?
Yeah, you can see it. The first half of the year has been a pretty exciting first half of the year for the hedge fund industry. And it hasn't been, as you know, and it never is, it hasn't been a single market cycle that we've seen through the first half of the year. We've seen a number of different market cycles. We had a sell off in April. We had a month of June where there was just kind of a lot of driving factors in different directions. So it hasn't been a single cycle. And then January was actually a reasonably slow start to the year. The one constant has been large cap tech. That's been relatively steady, but at different points, small caps underperforming and internationals underperforming, and interest rates are rising and falling. So there's been a lot of different things going on. Overall, you can see here, leading area of performance is equity hedge, up more than 7%, 7.1% for the HFR 400 equity hedge. And you can see that up 5 and 5/8% for the HFRI macro. And that really includes the gains in the first 4 months of the year after posting declines in May and June. So you saw strong performance there. Overall, the 400 about 5%. The overall composite, as you can see, also in the same area, 5%. Not surprising there. The HFRI 500 about 5.2 or 4.2%. 3.8% for the fixed income based relative value strategies, which is actually the leading area of performance, one of the leading areas in June. See all those well ahead of US equities, which even though they were up more earlier on in the year, that had come down to around 3.8%. And then finally, event driven, which got off to a reasonably slow start for the year, but the last few months have been building. You can see that's up to about 2 2/3% gain thus far in the first half of the year.
Okay, and then sub-strategy wise, what are we focusing on?
Yeah, again, I talked about it earlier. Leading area performance is quantitative directional, which again are strategies that have a lot of the same trend following quantitative qualities of CTAs, but whereas CTAs are really in futures, liquid futures contracts across hundreds of different assets, currency, commodity, fixed income, equities. Quantitative directional are only focused on running the quantitative models in the equity space. And you can see that gained nearly 13% leading area sub-strategy performance in the first half of the year. After that, you've got energy-based materials. That's also with the decline in the month of June, still the second leading area of performance with a gain of about 11.3%. 10.3% for technology. That's probably not surprising to anyone, given that that's been the most steady and constant element of market performance in the first half of the year. 10% for the healthcare index, obviously similarly, a lot of the same variables, a lot of the same factors are driving the performance in both of those. And then you see the HFR 500 macro systematic diversified index, which again, right out of the gate, this was the leading area of performance. Even having pulled back in May and June, it still ends up in the top 5 areas of performance for the year. So it's still a strong year at 9.1% thus far for the first half of the year. And I think as you look into the latter part of the year, with a lot of these political uncertainties, a lot of these interest rate and inflation uncertainties, that I think the macro systematic diversified CTA area is still a very interesting place for investors to be. And you see, again, all those well ahead of the performance of U.S. equities you see here.
Thanks. So that's 6 months in the rearview mirror and the 6 months coming up ahead. Thanks, Ken. It's great to talk to you.
Great. And then the last thing we just wanted to touch on in the last slide, as you know, we have a new website up. We just put that up a couple of months ago. So please visit the new website, www.hfr.com. We got a lot of great new features there to look at. When you do get there, please check out the investor guidebook. You can click on it and save it. It talks a lot about the use cases for all of our investable indices, HFR 500 as well as others, and you can see that. If you have questions in it and you'd like to set up a call with me, you can email me directly. You can email whoever you're in touch with at HFR, or you can send an email to indices@hfr.com. Happy to set up a time to go over that and anything that you see there that you have questions about, how institutions are getting more and more sophisticated in their use of the investable indices. And then finally, if you're watching this video, you know we do regular performance updates for HFR indices on YouTube channel. So please continue to watch those. Subscribe to the channel. And also, if you have questions and there's things that you would like us to discuss in greater detail on future calls, please feel free to send us those questions directly through the YouTube site. Thanks, Aniqua. Thanks, everyone, for watching, and we'll be in touch with you next week.